Hello and welcome to another edition of Stockwatch on this middle of the trading week, this Wednesday the 28th of July. So now that we are fully in the big Silicon Valley earnings release calendar, we can see that Apple and Microsoft surpassed their earnings predictions. Apple most significantly had a big earnings beat, but their stock did drop, and let's just check a look at why that is. Well, overall, the sales were up 36% from last quarter of this time last year. iPhone sales and iPad and Mac sales increased quite well. So let's just take a quick look at the numbers then. So we had an earnings per share of $1.30 versus $1.01 estimated, and revenue was up over $81 billion. And this is surpassed the expected $73 billion as well. iPhone revenue actually came in at nearly $40 billion. And that was against a $34 billion estimate as well. So as I said, Apple stock was down by 2% after it did warn on earnings call growth in September would not be as strong as June's. This is because of a shortage in chip supplies apparently, and they didn't offer a formal guidance for going forward, but they haven't really been doing that for most of the pandemic anyway, so it wasn't really too much of a surprise in that sense. Microsoft as well has been very buoyant. They have had a big earnings beat and given an optimistic revenue forecast as well. So let's check a look at their numbers too. We've got 217 earnings per share against 192, and just over $46 billion in revenue up against just over $44 billion. And revenue did rise by 21% over the year, over the last quarter, which ended in June the 30th, obviously. And according to a statement, the revenue was increased by 90% and net income increased by 47%. So very buoyant for these big tech companies. It's always a good sign when companies are bouncing back after the pandemic. And looking on Apple stock at the moment, what I was always looking at to see if we're going to surpass the previous peak that we saw at the beginning of the year, just in January. But we have done, as you can see, prices are now onto the upside. As I said, we do get this 2% drop in stock, but that's because every time there is a little bit of a downturn in news, it reflects on the prices as well. But as you can see, very buoyant against the Ichimoku cloud on the long term. This is a daily chart, by the way, as usual, like I start off with. So let's just take a look on the intraday as well. Let's just see where we are in terms of possibilities here. So just get rid of these few so it's just a bit easy to see. So as you can see here, as long as we stay above the recent break, as you can see, prices are just slightly finishing off on the upside there. We are seeing more positivity in Apple, especially after this big ascension to the upside, this ascending channel that we see. If we fall out of it, then there could be a possibility that we start piercing the top border of the Ichimoku cloud, and this could definitely be a good position for a sell. But until that happens, I'll just be looking at prices being bid. If we did get more of a fall in price, then it would give us a bit more of a divergence. But for now, we are looking to the upside only for Apple, and the same with Microsoft really. I mean, as I said, these big silicone tech companies, they're only going one direction at the moment. As you can see with Microsoft, we did surpass previous peaks here and here at the 260, 240. Now we're roughly trading at the 290 region. Will there be a slight chance of a slowdown? There is a slight bearish divergence here, but it might not really come into fruition if we still keep getting positive news coming out of Microsoft in general. So it was always expected that earnings would surpass expectations for most of these companies, and still going in to the earnings season report as well. It hasn't finished yet, so just keep an eye on what's coming up in the earnings season calendar. If you are trading on any stocks or potential stocks, look for the upside, but also look for any detrimental news, such as when Apple said there could be a chip shortage, or they didn't give a physical outlook for the rest of the quarter. It could weigh in on prices slightly. which we have seen. So just keep that in mind. Even though we do get big earnings beats, it doesn't necessarily mean that prices are going to start shooting very higher. So just something to look out for in the near term. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, as usual, please add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.